Tak ada sore mas. Kan Yudi ya ke pagi, beri kan Yudi siang.
Technical analysis. It's awesome to understand candlesticks and candlestick patterns, but that's not going to get you to a point of having a profitable trading career. In order to get to a point of making profits, we need to have what's called an edge or an advantage over markets. The way we get that advantage is what makes us money over time, and the way we get there is by having a consistent way of trading. Think about your trading profits. Would you want them to be consistently going up with small pullbacks, or inconsistent, going up and down like a roller coaster? You'd probably want them to be consistent, right? If you want your trading profits to be consistent, you have to have a way of trading that is consistent. That way of trading that is consistent is what we call a trading strategy, and that's what we're going to build right now. In order to build a trading strategy, I always look at four main components, and I call them, we're going to talk about this in depth a little bit later, CEST. What this stands for is conditions, your entry, your stop, and your target. So at any point you have a strategy, your conditions are going to be things like trend, an indicator lining up, support or resistance level, some kind of area of value. Those are all labeled conditions. Your entry reason is going to be, why did you actually press that button? In our case, it's going to be a candlestick pattern. Your stop loss is going to be, where are you getting out if you're wrong? And your target is an idea of where you're getting out if you are right. If you don't have all of these in the strategy you're trading right now, I would go and start with something like this and create a new strategy, or build on this with the strategy you're already using. And if you're not using a strategy yet, understand that you need a consistent way of trading. With that said, let's dive into the strategy. As you can see here on the screen, what we're waiting for is a really simple setup. We're going to be using the 20-period moving average, which is the blue line you see on my screen, as trend identification and as an area of value. When we combine those two things, what are they? That is our conditions. At that point, we're going to be waiting on our 382 candle or 38.2% candle to touch the 20-period moving average and wick off of it. And I'll show you what I mean by wick off of it in just a second when we go to some examples. At that point, the close of that 38.2 candle is our entry, and then we put stops and targets accordingly, which we'll go over when we look at some live examples of this. Again, it's not some crazy wild strategy. It's consistent, but over the past, since 2018, it's provided a 64 to 65% win rate with a 1-to-1 reward to risk ratio, which is a very, very good strategy. You can adjust the reward to risk. You'll probably have a smaller win rate, but again, that's up to you. You can go test it. I haven't fully optimized this yet, but let's look at a couple of live examples on a chart. Okay, so right now on the chart, what would we be looking for in order to trade this candlestick pattern strategy? We would be looking for the conditions first. What are our conditions? Well, if we need the market to be in trend according to the 20-period moving average, all that means is we need price to be trading above that 20-period moving average. Is that the case? Yes, so our first condition's met. We then need price to touch the 20-period moving average with a wick. Has that happened? No, it has not. So what do we wait on? Well, we push the market forward and see what happens. Did that candle touch the 20-period moving average, wick off of it, and wick off of it? This is what I mean by wick off. Did the candle